We're the claims department for the group. And especially in a self-insured environment, it's very important that your claims department understands that the lost dollar, the claim dollar, is a component of the employer and group's bottom line.
Welcome to the Self-Insurance Podcast, brought to you by CRMBC. Every week, we're interviewing industry experts, restaurant operators, and brokers to talk about the world of workers' comp self-insurance in California. My name is Stanley, and I am the CEO of CRMBC, California's only restaurant workers' comp self-insured group. I'm joined here today by Randy Bugg, the Vice President of Pacific Claims Management, our third-party administrator. Welcome, Randy.
Thank you for having me.
So the purpose of this podcast is that restaurant operators often get stuck focusing on the things that are causing them the most pain, like food costs, labor, menus, things like that. And often work comp kind of goes by the wayside until it becomes a problem. And what a lot of people don't realize is that properly handling your work comp program actually can increase your profitability drastically, and that not properly paying attention to it can cost you a lot of money. So we're here today to talk to Randy, who is our new TPA. The way that a self-insured group works is we've got a bunch of restaurant owners that came together that said, we want to self-insure our work comp. They have a board of trustees. I'm the chair of the board and the CEO. We've got an administrator, that's Path Alliance, our loss prevention services, our CPA, our underwriter. And one of these aspects is our TPA, our third-party administrator. So Randy, give us first just a brief description of what that means to be our TPA.
Well, really, we're the claims department for the group, and especially in a self-insured environment, it's very important that your claims department understands that the lost dollar, the claim dollar, is a component of the employer and group's bottom line. Self-insurance is a direct one-to-one correlation. There is no additional padding or profit or anything like that. A third-party administrator is strictly there to handle your claims on your behalf.
And you are our new TPA. We just recently switched to you, and part of the reason was because of your unique culture that you have at Pacific Claims Management. Can you tell us a little bit about that culture?
Pacific Claims Management, we began Pacific Claims Management about 12 or 13 years ago, and really it was under the philosophy that we really were kind of wanting to be different and focus really just on claims adjusting. A lot of TPAs out there, they've gotten into managed care over the years, or they have other ancillaries that they see as kind of a portion of their business, and they're really not good at any one thing. They're okay at a lot of things. We really just want to focus on adjusting claims and being the best at doing that.
And one of the things that we talked a lot about during our courting process when we were interviewing you guys was about the importance that you place on communication with our members, which is unique to self-insurance because it's very rare that in a traditional insurance program that you get one-on-one access to your adjuster or the legal team that's handling your claims. So tell us about this communication philosophy that you have.
Well, I think one of the things that's unique about Pacific Claims Management is that we're actually here in the office. And so not only do the employers have that one-on-one relationship with their adjuster, but they're actually here in the workplace, much like the employer themselves are. And that's a tremendous advantage. And one of the things that we have always done is we don't use voicemail during business hours at all. When the employer calls or their injured employee calls, they're going to speak with someone. And that could even be me. Right? None of us want to walk by a ringing phone. Because we don't use voicemail, you get help immediately with whatever your concerns are. We believe in making the calls. We'll be reaching out. We don't want people to have to call to find out what's going on. We want them to be informed all the way through. And so that way we don't have to have a big meeting to discover new things. We really want to take the surprises out of the entire claims process for everyone involved.
And one of the philosophies also that you have is the number of points of contact, because we all know in our world, in the workers' comp world, the longer an injured worker goes without being spoken to, or they get scared, or if an attorney comes in and finds them, that it's more likely that that claim becomes litigated. And then all of a sudden the costs can kind of blow up. So we, first and foremost, when there's a legitimately injured worker, we want to take care of them, and we do the best that we can to take care of them. And tell us about what happens in that first 24 hours.
Well, as soon as we get the claim, we have a team, our 3-point contact team, and they reach out. The first call they make is to the injured worker to let them know that we've got their claim. We're going to be taking care of them. This is how they're going to receive an income and be able to pay their rent or provide for their families. This is where they'll need to go regarding medical care. We want them to get the very best, and we let them know that. The next two contacts within that 24-hour period are to the doctor, to let them know how they can basically get authorization for any medical treatment they think the injured employee needs, where to send their bills, who the adjuster is going to be, etc. And then the employer, because we want to make sure that we listen to them, that we hear any concerns that they may have. Many times, as you point out, people that are injured on the job they're scared. They don't know what's going on, and the employer wants them taken care of. They want them taken care of well. And so it's important that we hear that. Likewise, if they have any concerns about the claim or how it occurred, we want to be able to act on those immediately. So that happens within the first day of getting a claim. It goes to the adjuster within 24 hours of that. The adjuster also reaches out to make sure that we have all the information that we could possibly have going into everything so that we can be really aggressive in how we administer the benefits.
And tell us about how you guys utilize nurse case management and triage.
Well, I've got to refer back to the differences between PCM and a lot of the other third-party administrators out there. So we don't have any financial interest in nurse case management. We don't make a dime off of those things. Those are our tools to properly deliver benefits. And so if we have a serious claim, or we have a claim that the person's been severely injured, or maybe disability is going on longer than one would normally expect, we'll utilize that nurse and be very specific with that assignment, what the goals are going in. In my experience, what has happened is a lot of that decision-making was taken away from the adjuster. And I've even seen where some protocols for a referral were as short as 2 weeks of disability. Okay, well, that's ridiculous. And then the nurse would just go on and on and on without any type of goal in sight, and almost become a crutch for the adjuster who might not otherwise be seeing the file as often. So here we make those referrals very specific, and we keep our caseloads very, very low. So that way it enables the adjuster to be the one in communication with the managed care provider and the injured worker and everyone else.
Now walk us through what happens when a claim goes south. So in other words, it becomes litigated, or you suspect that there could be fraud, whether it's from the injured worker or whether it's through the practitioner.
Well, I think what's important is before it goes south, one of the things that we do is we index every claim that we receive. And what that means is there's a company called Verisk, and they used to be called ISO, the Insurance Services Office, and we'll index our claim with them, and that'll give us a report back of any claims that person may have had, automobile, any type of personal injury, and that allows us to see, okay, does this person have a history? That may not be bad. It's neither good nor bad, but it's just, is there a history? And then if something occurs within the life of the file that it goes south, we're able to act on that, get those records in, and see if those records correspond with what's going on in our claim. And then we'll decide, okay, do we need to look into this further? Do we need to maybe do an activities check, or do we need to take their statement, or do we need to have them surveilled? So there's some tools that we use kind of in an escalating manner, depending on what we suspect may be going on. When we do those investigations, we always couple them generally in a litigated file with a deposition, see if maybe the injured worker is going to perjure themselves, or whether or not their testimony is consistent with the findings. All of those investigations, the way that we're set up here, those get referred over to our SIU department for potential referral to the district attorney or Department of Insurance, depending on the circumstances if they qualify for fraud.
And tell us what SIU stands for.
Special Investigations Unit.
And when we talk about communication, In traditional insurance, often an employer might not be so willing to share that, hey, there might be a claim here because they don't want their rates to go up and their XMOD to go up. We're exactly the opposite. We want them to over communicate with us. And even if there's the chance that something might be a claim, we want them to call us and we want them to be honest with us because that helps us to deal with everything the best way that we possibly can. You have some specific things to say about that. So talk to me a little bit about the importance of honest communication between the employer and the adjuster.
Yeah, and that's really key to success. Honest dialogue means the good, the bad, and the ugly, right? In a self-insured environment, there is no incentive for a member or an employer to not report the claim. I've been around for 32 years in the claims industry, and I've seen times where an employer may be reluctant to report something because it's going to hit their premium. But in a self-insured environment, if they pay that doctor's visit and they don't report it, they're just taking $1 out of their left pocket and putting it into their right pocket because they're still paying for that claim. And the longer you wait to report a claim, the higher the likelihood, almost 100%, it's going to go bad.
Yep. And similarly with return to work. So we know that obviously we don't want the employee to return to work before their doctor says that they should, but getting them back to work is a huge strategic piece of this. When employers are reluctant because they've had a bad experience with return to work, or they just can't imagine what they could do for modified duty, that kind of creates some hiccups. Talk to us a little bit about what you've seen around the return to work. Why is it so important and why we need the employers to communicate with us about that?
Well, yeah, there's a lot of different factors and really two come to mind right away. Successfully returning somebody back to work is the goal. And the earlier that could be done, you're going to save disability time, you're going to save medical costs, and you're going to return the workplace and the worker to a higher level of productivity. Anytime you have somebody out of work, that burden shifts to other employees, and that can do a lot of things. It can hurt morale. But two, like I said, the good, the bad, and the ugly of honest communication is maybe this wasn't a stellar employee. Maybe this was somebody that had personnel issues and very legitimately so. Maybe that's not the best course of action to have them return to work at that particular time. We can have that dialogue. Let's have that conversation, because having that honest conversation, we may be able to help come to the best conclusion from a return to work standpoint for the entire employer environment and not just specific to the employee.
Let's talk a little bit about what goes into settling claims, because there's all different philosophies, there's all different ways to settle claims, and it's really an art form. So give us the big picture of what is the philosophy on settling claims.
Well, I think the biggest thing is that everybody, the employer, the group, the program administrator, that they all be aware of the circumstances that comprise the settlement, to make an informed decision, right? How much permanent disability is there? How much future medical is there? Not just the value of the claim itself, but how it's also settled. Do we want to offer a stipulated award and have the future medical remain open for the life of the claimant related to their injury? Or do we want to try to compromise and release this? There's also times where you have a litigated file and you have hotly contested issues. And do you want to offer an early settle? What does the potential exposure look like? Does the cost of ongoing litigation look like? Can you exercise a settlement or a compromise and release at a lesser valuation and get out of that claim at an earlier point? All of those matters really need to be discussed, and that's something that we really strive to do so we can come to the best outcome possible.
And one of the things that we've talked a lot about, Randy, is the trends analysis. You guys are the ones that are getting the meat of our information on what's happening, what's the trend with a particular member, what's a trend with something going on in a particular area of the state or in fast food or in fine dining. But all of that trend analysis is only as good as what we do with it. And so one of the things that we're really looking to improve on is once we get these trends, then to work with the operator, to work with our loss prevention people so that we know, hey, this trend is happening, you can do this about it, and help the group. Talk to us a little bit about trend analysis.
Yeah, so you're right. All the claims data kind of goes into one pot, right? It all goes into the claim system, and that's what we work with over here. But then that data needs to come back out in a useful manner, and so we have a variety of different trend analysis reports that we work very closely with your program administrator and the board to review. And of course, the board and the program administrator are going to have their own take because they have different areas of expertise. So it's really combining the claims expertise with the program administrator and the board and saying, okay, what do we have going on here? Is this an issue with maybe the Workers' Compensation Appeals Board in Van Nuys, where we have judges that are making it very difficult for us and these claims aren't settling maybe as well as we thought they would be? Are we having a severity issue where we maybe have a member who isn't providing certain PPE, or maybe they're having people do things that they're not qualified to do? And so really just putting our heads together and analyzing those different factors and understanding why things are looking the way that they do from a loss cost standpoint.
Randy, this is an amazing conversation. I really thank you for giving us such great insight about how the TPA works and what it means to our bottom line and our profitability as a group. Thank you so much, Randy Bugg, the Vice President of Pacific Claims Management, for joining us today. Thank you for joining us for the Self-Insurance Podcast, brought to you by CRMBC. If there's a topic you'd like to learn more about, or if you have any questions, just email us at info@crmbc.com. Remember to subscribe, like, comment, and share, and join us again next week for more tips on self-insurance.